Hello everyone, it's Red with RedDragonLeo.com. I hope everyone had a happy Thanksgiving here in America. And for those outside of America, it's just another day to you guys. It's kind of that way to me too. I'm not much of a holiday person. I know that's bad, but I don't know. When you have no children, except your cats and the female roommate that I live with named Laura, who's a best friend, and you just without children, you kind of don't really celebrate too many holidays. Yeah, I still have Christmas, and I send cards to my family and stuff like that, and I guess nieces and nephews and things like that. But as far as throwing a big event for myself, I don't know, just not really into it, I guess. Strange, I guess, but anyway, moving on. Looking here at Cobra's chart, we can clearly see that the market is just kind of trending sideways here a little bit, up and down, kind of not really telling us a whole lot. That last candle was certainly a bearish candle, at least on the SPY, it moving down like that and putting in a topping tail. And of course, we know that big up day was just a squeeze day to squeeze out a lot of the bears. It's really just showing a lot of indecision here as to what's going on next week, and it's going to be a guessing game. I read lots of people's blogs and did my own analysis too, and could come to the conclusion that I don't really know what's going on next week. Isn't that funny? Well, who does, for that matter? I don't think anybody does. We all just guess at it. Cobra here, he is pointing out that the week is bearish, and that the non-farm payrolls is usually a turn date, and that's on the 3rd. What is that, Friday, I think. And I agree. I've seen that happen many times. It definitely tends to turn on that day, whether you're going up into it or down into it or whichever way. So the fact that it's a bearish week next week, I do think we're going to sell off and possibly put in a bottom by Friday. Looking at this institutional buying and selling chart, it certainly looks like they are not doing much buying right now, not at these levels. As you can see, that the accumulation here, which is the blue line, has just kind of fell off a cliff since this area here before the big run-up. Now that run-up is actually, if we look here at the 15-minute chart, so right here was when they were doing the most amount of accumulation during this run-up. And from here on out, hardly nothing for accumulation. So you look at that again, and you can see right in that area, again, that was their highest accumulation area. And then once it peaked out here, they did no accumulation at all. Matter of fact, they sold into it. So, that tells you they're looking for lower prices to get bargains before they take it higher. Now, how much is that going to be? I don't know. Let's go over the charts real quick, and then I want to go over some of the fake prints. But Ron Walker does a good job of going over the charts with his videos, and he makes a lot of sense here. And I'm in agreement with him on this. Of course, that doesn't mean anything because he's been wrong. I've been wrong. Lots of people have been wrong in this market. They trick a lot of us. That's just the way they play the game. But I do agree. I do think we're going to go down to some level here and then turn and go back up for a wave 5. And this, of course, is on the New York Stock Exchange, NYA daily. But looking at that on the weekly here for this, that would be down a little bit here. Again, maybe down to 1150 area, and maybe even as low as 1130. And then a move back up into January, February. And I do expect to move to that fake print of 118.16 on the Diamond Trust, which again is around 1260 to 1280 range. Okay, and that would make good sense. That would be on a weekly chart. It'd be a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. And that should complete the primary wave 2 all the way up. And once that fake print is met, then we're going to go and meet all of the downside fake prints. And that would really make more sense with this here chart as well. You don't really expect it just to roll straight down and go, into the negative. Generally speaking, once it goes up this high, when it starts to roll back down, it's going to do it in smaller, in smaller humps, basically, histogram towers. It's kind of going to go down, then back up a little, and then down to put in a negative divergence. Similar to the way it did here. Same thing. You kind of expect it, roll down, then back up, and roll down, back up. This one was so huge, obviously it took 3 if you count it, but I guess you could count more than that out of it, but it was clearly putting in a negative divergence. This one probably will only put in 2. That would be basically the down move we're getting ready to have, our wave 4, then back up a little bit, and then finally roll into negative territory by end of January, and then start to really get bearish. So that's more of a longer term thing, though. Okay, so here on the daily, as you can see, we can still go down a little bit further before we roll up, and I think that's exactly what's going to happen. I think we are going to go down, and we're pointing down here. I do think we're going to go down. I don't know how low, but I do think we're going to, this is going to move lower next week, and before it finally recycles back up. So again, we're looking here. What is that? That's a necktie. When, of course, it's a necktie on this one day, but after it keeps going up, it'll break apart and it won't be a necktie. But it'll still be excellent support at 1130 area there with that green 200-day moving average. Same thing with the weekly. An 1150 area is also a lot of support as well. So now, as for Monday is generally bullish Monday for mutual fund Monday. So I don't doubt that they will somehow spike the market up. As you can see, even though here on the 60-minute we are rolling down, we are putting in negative divergence, and we should go down throughout the day, but the 15-minute is pointing up. So there's going to be a little bit of a battle there with the charts. I would suspect that any gap up that we have on a Monday is a great shorting opportunity, because all it's going to do is put in this basically a lower histogram tower here, where it's going to roll over to the close that I would suspect. So I mean, unless it's like massive and really goes up here, which I really doubt. If anything, it's just going to go up here on the histogram tower and then roll back down as this thing goes negative, is what I believe is going to happen. So if it does gap up, then I think that's a good shorting opportunity into Tuesday, and I think it'll probably find a little short-term bottom into the end of the day Tuesday or Wednesday, just based upon these charts. And that's looking at basically this pattern right here being similar to some of the other patterns here where we have sold off. Now, I'm not saying we're going to sell off this much again, because I don't know. That would, of course, violate this whole move. But these patterns are very similar in the way that they've chopped around and had ups, a big down day, then an up, and then another down day, and they look very similar. So maybe the move will be more like this one here. Maybe it'll just be down, this far. A big, maybe Monday, Tuesday, big down days on that, then maybe back a little bit on Wednesday, then down again on Thursday, Friday, and then finally find the bottom. So I don't expect big selling, because we're into December and the volume is lighter. So, but I do expect some selling. So anyway, so it is very possible we could come back up here, and you can see we're going to hit a double dose of resistance from a falling channel line here that is drawn in, as well as one across here. So a double dose of resistance if we do pop back up in the morning and then fall back down. And I think we're going to break this and fall down here. And here's the 1150 area. on a channel drawn in. As you can see, the 30-minute could very easily roll back up or continue down. So which is it going to be, a gap up or move down? It's pointing down on the 60 and it is pointing down on the 30, so it can do either or. I don't know which. I do think Monday, whatever happens Monday, I think they'll be selling going into Tuesday, and we might see a little temporary bottom either late Tuesday or Wednesday morning, either around this 1150 area, or if it breaks that on down to the 1130. I don't know if we're going to go down that low or not, but I think we could possibly go down to 1150, maybe come back up on a Wednesday, then fall back to 11 Thursday on Friday with the non-farm payrolls. Maybe put in our bottom there for a wave 4, and then go up the rest of the month. This is all just speculation, but it's just based upon trying to look at the charts and trying to calculate this stuff in with the news events that's coming out. So on the 15-minute chart, as you can see, we are, cycling up. That does not mean it has to go up. We could just as easily just roll right back over and go back down. But I think that they might try to gap it up just because they can and bang on that trend line and then roll over into the close. 5-minute chart really not showing much, so I really won't even go into that. I do want to cover the fake prints. We still have this one of 880 that was sent to me, 885 that was sent to me on the SPY. At some point, I do believe we're going to hit that, but I think it's going to be next year. I think we're going to hit, the upside fake print first. Which is of course, this one here. I think this is our final target somewhere in January, February. And then after that, here's one that was sent to me as well, emailed to me, and this is an upside print, which is on around 750 area, 749, 750. This is the futures for the Russell, the SMA. This is the futures, the TF, the futures for the Russell. This, I suspect, is going to match up with our fake print to the upside. Again, if I scroll over, that matches up around 749, 750 area on this particular chart. Okay, and this is again the futures for the Russell, and I think it will match up with this print of about 11,800. So I think that's going to be our upside target, but I do see some selling next week, folks. Now, here's that 106 print. We still have that. I don't think we're going to go down there next week, but it is possible. So do keep that in mind. This is 106 on the SPY. Now, there is also the Wilshire fake print still, and that one bugs me. You'll notice all these prints, by the way, they're taken on the day, and they show up on the day that you take the print. A few days later, they do not show up anymore. So here it's showing on the day that I took the screenshot of it. And, same thing on this one. It showed up on the day I took the screenshot. It wasn't there the next day. This one is a daily intraday chart, so it's showing up intraday. But it's still on that one day. This one didn't show up after a day or two. It was gone. And same thing on this one. This one is bugging me because it keeps showing up all the time. This 939 gold one, I think it's just a mistake. I don't think it's a real fake print. And see, it showed up here again. It's like at the close of the day, it seems to show up all the time. So I think that's just an error in the system. Here's a gold print showing our upside target, 3,500 roughly. I don't know when that's going to happen, but keep that in mind when we finally do rally. And there's that one again. That one showed up on the day it was done. Again, you're still seeing these. Here's one of Goldman Sachs, still showing Goldman will be the one that sacrificed down here in that 10 area or something. And the Wilshire, I wanted to get to the Wilshire here. Where in the heck is my Wilshire chart? There's the one for the VIX at 349. I'm running out of time, and I can't find the Wilshire chart, folks. Okay, here's the Wilshire. Here's what bugs me. The print shows up here, and it's taken here. That still bugs me. It's December 7th, Pearl Harbor Day. That's something to worry about. Okay, I'm out of time, guys. That's it. Good luck, everyone.